Okay, may pips be upon you. I hope that you are doing well with your trading thus far this week. I have a trading idea. I'm going to give you some top down analysis on pound JPY. All right, let's start with the monthly. See all this writing I got here. I'm going to explain everything. All right. Let me get an arrow for a sparrow. A nice big old arrow here if I can. And boom. All right. So what do we have? All right. We have pound yen coming down bearishly into this monthly order block. Right. We have monthly demand here. Price makes a lower high here, and we end up actually making a technical lower low. We took the liquidity is what it is. We took the liquidity that was resting here for people who took long positions and left their stop loss there. This triggered this took them out of that trade after enjoying some profits and then taking them out of the trade. That's terrible, isn't it? But anyway, that's what happens. All right. So and from here, price moved bullishly up, breaking structure along the way. All right. All these wick highs are liquidity points. That's why I have this line here with this dollar there. Uh, Price swept all the stop losses here for people who took shorts. Okay, swept them all. All right, broke structure to the upside, moved inefficiently upwards and left this imbalance here. Right, and we ran the highs here. We ran the highs here with this aggressive bullish move up into this monthly supply. Okay, what are we expecting? This is the higher time frames, and we went from making a higher high, higher low, higher high, higher low, breaking this high here, breaking this structure. We made a higher high. What do we expect after a higher high? That's right, a higher low. Once you break structure, we are waiting for a return to impulse. All right, after it finished making its highest high over here. Now, let's go to the next time frame down. Look at my arrow back. All right. Take a good look. All right. What I want you to see is, I don't need that anymore. All right. What I want you to see is we're going to key in on these areas. All right. After we come up here, we have this imbalance. Price will come down here at some point. We don't know when, but it will come down here to mitigate this inefficient move, that filling this fair value gap, right? This this inefficient move is going to balance it off, but we don't know when. This move up has an imbalance under it, so we're hoping that's what also motivates price to come on down here and return to impulse. If I can just find where the impulse things are, I have them here. I drew them here for this reason. Pound yen. My goodness, I wrote it out. There you go. See, they're not very pronounced. Uh, uh, Weekly. There you go. Where's that? Weekly. Yeah, I got it. Where's my weekly return to impulse? I thought I. Oh, there you go. All right, weekly return to impulse. This is what we're looking for. A weekly return to impulse. And where is my weekly arrow up here? All right. This is what we want to see. A higher a higher low created and a higher high after that. After it finishes its mission here, that's what the intent of the higher time frames are. The monthly and the weekly, we are bullish. We have broken structure to the upside, and we are in this monthly bearish order block, this this supply, and we're looking to see what price does while it's up here. But you see how we have these uh, this demand area all sorted out. We have a monthly inside, and inside of that monthly, we have a weekly uh, order block, and then on top of that, we have a daily order block. So I'm really hoping that this is the spot where price will return to as far as the impulsing order block that sent price to break that structure. All right. I want you to also make note of to the right here, we have previous monthly high. This is the previous monthly high here. And this also happens to be the previous weekly low. All right. So we're on top. I mean, that when you break highs like that, when you break daily, weekly, monthly highs, that is there's liquidity on every level. So when price did break the previous monthly high, we know that there was a high probability that it would continue to go higher. All right, once it closes above these levels, it's grabbing liquidity for a bigger move. All right, now we have the previous weekly high is here. All right, and we are above that. All right, so we're waiting for price to reverse, come on back, and frequently these levels are used as support and resistance kind of levels. All right, so bear that in mind. Okay, and I want you to track it from this point. All right, I think I got all the ones I wanted you to see here. Let's go to the daily. I don't really have extras on the daily. All right. Well, you see that price is still bullish. We still have a break of structure to the upside, and we are still waiting that return to impulse. We don't have new order blocks or anything to show you because the point has been made already. That we are in a zone. We are in our POI, and we are looking for signs of reversal. Let's go to the 4 hour. On the 4 hour, it gets into a little bit more detail. Okay, and I want you to see those details. Let's see. Okay, all right, let me see. Let me see. Boom, 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 boom. Okay, now we have a return. We're looking for this return to the impulse to this daily order block here. That's what we're looking for, and that happens to also be where the previous monthly high and the previous weekly low is also located. So this is a prime area. All right. Oh, I didn't mean to do that. All right. Let's get a little closer and take a look at this price action up here. We have a high here, high here, high here. Price had a nice little pullback to this 4 hour order block here. It's a bullish order block that's holding at this point, but I think it will fail inside of this larger monthly uh, bearish order block. All right, and we have an order block above that. All right, let's look at this thing in detail if we can. A little bit more detail. Let's see. Yeah. Oh, I forgot to. What I wanted to show you on that 4 hour. I'm sorry, I didn't mean to come out of this. We have a we have this sweep here. All these wick points here is another sweep, right? It's a sweep that price does on the way up. It sets up trying to generate and accumulate orders, and it sweeps all the people who took shorts here and goes up inside of here. And if we zero in on that, excuse me, uh, yeah, I think that was it. If we zero in on this and take a much closer look at that on the 15-minute, you will see that what I was looking for is this kind of situation. High, higher, break that low or equal it, even grabbing liquidity, which is best. I'd like it to go a little bit below, a little bit lower, and then test the order block that's up here, or make a slightly lower high. What am I talking about? A Quasimodo or a head and shoulders. All we're looking for is high, higher, lower. All right. And I think we might have gotten that here. We have a 15-minute, let me get rid of that. We have a 15-minute inside of an hour order block. I have this left shoulder here. Higher, higher. All these are good peaks. All these are good pullbacks because they have at least two candles consecutively, one trading outside of the range of the previous. All right. And I have this one here, and we have this lower. All right. This is the head, and we've tested it with the right shoulder. I think this was a great entrance for a short. And uh, I took that short. And so far, I mean, I've actually achieved 1-to-1 uh, profits here, and so far that's pretty good. I'd like to. I will only move my stop loss when I get to at least two R. All right, and I wouldn't even move my stop loss then. I'm going to take out my initial risk once we get to 2R. And then at 3R, I'm going to move my stop loss into profit. That's the way I manage. But because price will come back and snap you out of this. Okay. You always put your stop. I always put my stop loss above the order block in which I enter. All right. And because this is the invalidation point, this price point, the highest point of the order block. If price comes back and goes past that, then it invalidates the trade, and I don't want anything to do with it anymore anyway. So that's the protection offered by order blocks. And where am I taking this to? What is my TP? Remember that return to impulse all the way down here. All right, now I have this going to the end of the inefficiency, the higher time frame imbalance, because what price will do is cover this imbalance, and sometimes it'll jerk back up and then come back down. I want to catch it on the first jerk. All right, and that'll be enough profit for me anyway. All right, this is a ridiculous trade, but I think it stands a good chance. Um, the risk to reward ratio here is 52, 1 to 52. All right. We'll see how it goes. We'll see how it goes. And I laugh, but there are people who've done more, who've gotten better. We need to break structure here. We need to break structure here. We need to get past this 4 hour order block. Like I said, I believe it will fail inside of this higher time frame monthly order block. But this is the setup, and we'll see how it goes. I'm hoping that you benefited from this analysis, and if you did, make sure you leave a like. And if you think it'll fail, or you think it'll work, you know, leave a comment. I appreciate your feedback. I really do. I read all of them. Okay, and I will see you in the next video. Trade safely.